Hey guys, welcome to another video on my channel. Today in this video, we are going to discuss why it will become hard to generate exponential returns in option trading in 2023. So now I'm going to take you through phase wise from 2017. Let's try to understand how the market was working and what was the market structure and why it is going to become hard in 2023. So 2017 to 2020 period is a period where a lot of people were entering into option trading and most of them were buyers. There was very little awareness about option selling, and not many people actually ended up selling options because the margin required to sell the options was quite high, and also people thought that by buying options, the risk to reward was very good, so they had exponentially higher chances of making money. So, all this was with respect to option buying, and a lot of people started venturing into buying options. So, during this time, one more advantage what the option sellers had was the leverage. So if you remember, the brokers used to offer as much as 20 to 30 times leverage, which an option seller could use to sell penny options. So this meant we could sell one lot of Nifty or Bank Nifty option by just having around 2000 to 3000 rupees as our margin. So today it sounds absolutely absurd because it is not possible to sell any option with less than a lakh rupees. But that time it was possible to sell with as low as 2000 or 3000 rupees per lot. So this was a pretty easy time for option sellers considering the market volatility was quite low, the retail participation was also quite low, and the markets didn't move much at all. That means, let's say you ended up selling an intraday option in the morning, the market would just go nowhere and you used to get fantastic money by creating straddles or strangles. So let me just take you through the chart of 2017 just to make you understand how a typical intraday looked like in 2017 and 18. So when you actually take a look at any typical month in 2017, so let's just take this month of March. So if you see from 29th of March, where market was around 21,500, you can see after almost around 2 weeks, that is by 13th of April, market was around 21,600, just around 100 to 150 point movement in almost close to 14 days. And look at the volatility. So if you take a look at this, the difference between the high and low is not more than 200 points, right? So within a range of 200 points, it consolidated for almost around 14 weeks. So now you know why it was so easy for option sellers, because you just end up creating a straddle and the market would move nowhere. So if you get 2 continuous weeks of consolidation with no movement in the market, so anybody selling option would have made money. So next we witnessed some amount of volatility. So you can look at right over here. It went up to 22,000, again came down by 600 points. And the best part is you can see it was mostly either consolidation or one-sided move. Very rarely you are getting to see any V-shaped move. So if you look at this day, it was a one-sided move. If you look at this day, it was a one-sided move. If you look at this day, it was a consolidation. So if you look at maybe 4th of May, so it was a one-sided move. 5th of May, again was a one-sided move. 6th of May was a consolidation. So never really you got to see a V-shaped move like how we are getting to see today. So there were two important things here. So this we are actually looking at Bank Nifty, and you could see there is so little volatility. The second thing which added during 2017 to 20 period was the leverage. So there was so much of leverage available. You could simply go as far as 200, 300 points away. Nifty is what I'm talking about. The options would be trading at 50 paisa, 1 rupee and so on. Just sell full capital and keep double the stop loss. 80% of the times you actually used to make full money. And I am talking this with my personal experience where we had capital of around 10 lakh, 20 lakh by 2018 and 19. So we were making close to around 2.5%, 3% every single week is what I'm talking about, just by selling penny options trading at 2 rupees and 3 rupees by keeping double the stop loss. So option trading or option selling was this easy back during 17 to 20 period. So then what happened? SEBI came out with a rule saying that leverage is actually hurting retailers. So let's try to remove leverage from the system. So they started doing this phase wise. So they didn't want to remove all the leverage at once. So first they told whoever is giving 20x, 30x, so that is not allowed. First we are going to bring it down to 4x, then to 2x, then to 1x. So by 2020, so there was no leverage available in the market. And suddenly option selling started to become more expensive, because now unlike previously how you sold for 2,500, 3,000 rupees, it was not possible. You had to get minimum of 1 lakh or 80,000 to 1 lakh to sell one lot of option. So then came the part of 2020, that is the COVID crash. So this was the most important part because till that time they had never really seen volatile markets, and this was the first time where the market suddenly started to crash. And you see the VIX shooting up to 80, the premiums are so high you don't know what to do. So all this happened in 2020. The second most important part is a lot of traders started coming into the market system. So you can easily see during the period of 2020, account opening across brokers surged. So there were easily 3 to 4 times more participants who came in just 1 year because of the lockdown. So a lot of people started to come in. While a lot of people came in, so they brought in capital, they sold options, they bought options, and they became part of the system. So trading is not about, let's say I have a strategy. With this strategy, you can always make money. So there is no strategy like that. So just forget about all the transaction charges, brokerage. So trading broadly is a zero-sum game. So which means that if there are 10 people in the room trading, a person who is actually making profit will be taking the money from the person who is actually making a loss. So there is no wealth creation. It's just transfer of money between a person who has made a loss to between a person who has made a profit. Right. So now coming to this, it meant that there was no single strategy which used to work and which would work also going forward. So it only meant I had to be smarter than the other person to make money. And when lot of people start to take part in the market tends to be quite volatile. So this is where the volatility period began and the market started moving quite volatile, and the premiums were also really high. So let me just give you a glimpse of the kind of premium we had in 2020 and also how exactly the markets were moving. So right over here, if you actually take a look at this, so this is the chart of Bank Nifty during April and May of 2020. And what you can see here is I have just put a 30-minute chart from April 20 to May 20. So let me just show you the kind of range Bank Nifty was trading between. So if you look at from top to bottom, right over here to here, so there was a 20% kind of range which Bank Nifty traded in a month time. So if you go day to day, so you could see each day, right? So from here to here, each day used to be 5%. So this single day was close to around 5% again. And here we started with a gap down, and this day was close to around 7%. So these were the kind of move which we got to see during 20, where each single day was at least 4 to 5% up move or a down move, and the VIX suddenly shot up, right? And the premiums were so high, so nobody could really capture, even if you go to any simulator on any platform, the premiums are not properly captured because it was very volatile and there used to be some random premiums. A weekly short straddle in Bank Nifty would price in close to around 1600 to 1700 points when Bank Nifty was trading around 20,000. That is close to 8% is what it is pricing in within a week. So this was the kind of volatility what we witnessed. And as we started moving towards end of 2020, markets also started to stabilize and the VIX came down to the range of 25 to 30. So this period was very important because even though there was no leverage, the premiums were so high that people could still make money. People could sell options and still end up making money because of such high premiums. You go 10% away, the premium still used to be around 20 rupees, 30 rupees, which you could easily sell and make money on an expiry day. I'm just talking about expiry day morning, 10% away premiums were close to around 20 to 30 rupees. So this was still very attractive for traders because those who are selling 10 rupees, 15 rupees options, they could go as much as 15% away and sell these options. So once traders started getting used to the volatility, it became relatively easy because of the kind of premiums 2020 had. So then by end of 2020, beginning of 2021, as I mentioned, so the VIX started coming down to the level of 25 and even the premiums dropped. So now let's quickly come to 2021 and try to see the kind of movements 2021 had. So here again you see the market is actually quite volatile. So when we actually take a look at daily move, it was in the range of 1.5-2%, unlike how we saw during 2020. So let's just quickly come to Stockmock simulator and go to the month of May. So let me just come to the expiry day just to show you the kind of premiums what we had. So on an expiry day in 2021, so May 2021, even if you went 2% away, right? So right now it is trading around 32,900. So let's simply go 2% away, that is 600 points away. You still see the options trading at 45. Even at 3% away, you see the options are trading closer to around 24 to 28. If I wanted to sell something like a 5 rupee option, I could go as far as almost close to around 4 to 5% away. So similarly was the thing on the call side also. Let's say if I wanted to sell something at 5 rupees, I could go easily 4% away and sell at 5 rupees. So even though there was volatility, which we saw, there was also sufficient premiums for 3-4% away options for us to easily sell and collect these pennies. If you are ready to take little higher risk, you could come in closer with 3% away or 2.5% away and still make money by selling options in 2021. So this was the period which actually extended till 2022 mid or close to 2022 end. The market was quite volatile, so we used to see a lot of V-shaped moves, but in spite of that, there was very good premiums which we could sell and easily collect. So now we have already discussed how the VIX was during 2017 level, 2020 level, and 2022 level. So initially it was trading around 910 where there was no volatility. Then it came to 80 during 2020 where there was very high volatility. Then in 2021 it dropped to the range of close to around 25 to 30. And in 2022 it dropped to the range of 15 to 25. So that was the kind of range where VIX actually traded. So as we started to move towards 2023, now comes the point where the VIX starts to drop below 15 and starts to trade in the range of 10 to 12. In 2023, when the VIX dropped back to levels of 10 and 11, there were three things which happened. One, the premiums dropped back to the level of 2017 where they were very low. So what is the problem in having low premiums? Having low premiums is not the problem, but the problem really comes because of the next two reasons. The second reason, because of a lot of participation, the volatility in the market increased. So unlike how we were seeing a 200-point range for almost around a week, so market never traded that way. So there was huge amount of volatility which we got to witness during the period of 2023, and the premiums were not sufficiently pricing in. And the third main reason is with respect to the leverage. So there was no leverage, which meant you could not go far OTM and sell options. You had to come in closer to make more returns. So now let us try to understand how exactly your entire return dynamics changes because of the low VIX, higher retail participation, and no leverage. So I'm just going to give you an example. So now we'll take a look at the premiums side by side of 2021 and 2023. So here I have opened up the latest expiry of 2023, and here are the premiums during 2021. So when you actually look at it, today on a expiry day, ATM Straddle is giving us total of around 270 points, right? So if you look at 45,600 Straddle, which this is almost close to 50% higher, the level of Bank Nifty is 50% higher than what it was in 2021. So today it is giving 275 points, but back then ATM Straddle gave us almost close to around 800 points. So this is the difference what I was telling, why it was easier to sell options in 21 and why it is becoming harder to sell in 23. So now if you actually look at it, if I go just 1% away from here, so if you look at 45,100 option, it is already trading at 15 rupees. So here if I actually try to go 1% away, you can see even 1% away option is trading at 200 and odd. So here it's trading close to around 291 rupees. So you can see the kind of difference that we are getting to see. Here is 15 rupees and here is 291 rupees. So this was the kind of premiums what we had in 21. So now even if we come towards the later half of 21, so let me just show you, let me come to May when the VIX actually started dropping. So even during May 2021, you get to see that if you go almost 1% or 2% away, the premiums are still trading at 400 and odd rupees versus compared to now where it is hardly trading, 1% is hardly trading at 15 rupees. So let me just come to 2022 and show you the kind of premiums we had. So let me come to March of 2022. So here the VIX had again completely dropped, and when I went 1% away, the premiums were still trading at 100 rupees compared to today's 15 rupees. So I hope you are trying to get the difference of what exactly has happened. So before you could go 1% away and get as much as 100, 200, 300 rupees. Today 1% away hardly gives you 15 rupees in premium to trade. So what does this do? Even though there is no volatility, because of no leverage, you can't go far away. You have to stay closer in. And since you have to stay closer in, the main issue that is going to be caused is that any small movement in the market is actually going to send your premium spiking from 15 to 20, 25, where you are unable to hold the same call or put. So you will forcefully exit and the market will come back to the range. I'm pretty sure most of you would have faced this. Overall, this environment will make option sellers struggle to make money. Previously, achieving 30-40% was not hard at all. But suddenly, 2023, 30-40% seems to be quite hard. And this is going to be the kind of environment going forward also, because so many people are there. There is not going to be any easy money. So we have to struggle for money. There is no leverage. So that's the reason I believe. So unlike how option sellers exponentially generated returns of 40% above almost consistently for 5-6 years, will not be able to do the same in the upcoming years. So we might see increase in VIX due to election by next year, but at least this year and moving forward, option sellers are going to have a trouble generating over 30-40%. So I feel the reasonable expectation what a seller can have in this market is around 18 to 25%. We can reasonably try to aim for this number. With including our equity returns, we can try to aim for over 30%. So this is what I exactly wanted to discuss, why selling is going to become a challenge in 2023 and why trading also becomes harder to make money. So this is something which you can also see in system-based trading. So most of the system which worked really well in 2017 to 2022 are no longer working that great in 2023. Again, because of the same reason that you can't go far away, and once you stay closer, your stop loss is being taken out. So now the question is going to be, how exactly am I approaching option trading in 2023? So I'm going to make the next version on the same. What is my roadmap, or how exactly I am trying to approach option trading with 3 expiries being in a single week. If you have found this video informative, do not forget to hit the like button, share this video and subscribe to my channel. Thank you so much for joining.